All right, yo, yo, yo. Camera's weird today. Whoa. What's up, camera? Weird. All right, let me get my coffee and we'll fire this party up. Okay. 你好嘛? G'day, mate. Jumbo. Hey, man, the markets were awesome on Friday. But we got a new week. We got a new month. Not a new quarter, same quarter. And boy, did the markets open in a great place, huh? Well, challenging. I don't know if great, but certainly challenging. So, what do you want to do today? Gold, oil, Bitcoin, dollar, yen, Swissy, euro, pound? Let's go. Bum, 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 bum. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is... Whoa! What? Camera's weird today. I think this is an issue I have to do that too. That's a little better. What do you think? Will that work? Camera day. Weird camera day. All right, so hey, my name is Wayne McDonald. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com, the sponsor of today's Forex.Today YouTube channel and today's webinar. And I've been charged with the duties of helping you through proper understanding of technical and fundamental analysis, helping you learn how to plan your trades in advance and take control of your trading and give you some consistency. And if over time you develop confidence from that consistency and that control that you have, and you want to trade real money, maybe you'll choose Traders Way as your broker. That's it. Pretty simple. Visit TradersWay.com today. Pay it back. Right? Start today with just a demo account. It takes about 30 seconds. You'll be in the back office very quickly. Download MT4. Place a bunch of trades. You'll see the execution speed is fast. You'll see the spreads are narrow, and you'll see the swaps are great. So tradersway.com, give them an opportunity to earn your loyalty and respect. Thank you for being in these webinars. Thank you for being a subscriber. Thank you for participating in the chat. Thank you for leaving comments. Thank you for clicking the thumbs up, the likey button. Appreciate all of that. That interaction tells YouTube that this is quality content. So would you please support the Forex.Today YouTube channel by just simply participating? Make sure you click that like button, okay? I think the most important thing is you leave a comment. Oh, thank you, Jim, for thanking me for Peter. I thank you that you thank me. Yeah, so anyways. Max says, Wayne, you are correct, kinda. OTA is under fire from the FTC for outrageous claims. Oh, I didn't know. I don't know anything about that. I don't know nothing about nothing. I don't care, actually. All right. La, la, la. I don't mean I don't care about your comment. I don't care about them. But anyways. All right. Cool. Thank you for that, though. Whew. What an amazing Friday. Look at this weird camera thing going on? I feel like I'm a child all of a sudden. What? Was there an update or something? That's weird, man. It's weird. I don't know what to do with that. I wish I could just turn it and zoom in. Anyways, wow, what a great Friday, huh? We destroyed it on Friday. But we got a new day, right? If you remember from my book, there's a 3-second rule. You ring a bell, jump for joy, kiss your cat, I think I said, and then get on with the next trade. So now we're in a new week. Well, new day, a new week, and a new month. And it's very interesting because we open at bullish prices. So you really have to do a couple of things. Reconfirm your bias, which is a great place to always start. But if you were a bull, try to get you some, try to wiggle your way in, I suppose, right? Oh, how was your trip to Disneyland? Jim says the Asian fade was, yeah, I was busy. Yeah, it was busy faux show. There was a gap and a bunch of other things to make it interesting. Oh, you're in the Paris, huh? I fell in love with you. All right. So here's the interesting thing. This is the bear zone, okay? And this was the bull zone, okay? Now, by the way, I think on one of these pairs or a couple of these pairs, I tried to do a gap trade and it didn't work out for me, just so you know. La-di-da-di-da-di-da. Oh, and you know what's sad? You know what's so sad? I think I'm going to get knocked out of my Euro Turkish lira trade very soon. If not today, probably tomorrow. Boo! Anyways, I was hoping to hold that for a year, and it looks like only 10.5 months is what I'll make. So that's kind of sad. That's a little bit sad. We can see, I don't even know if I still got it. I checked earlier. Here it is. So I got in May 9th. March. Yeah, so it's about 10 months, pretty close to 10 months. And I'm down to just like 100 pips. But check this out. In 10 months, I've collected $900. That's kind of interesting, right? On a $100 investment. So you can't cry for me, but I was trying to hold it for a year and then do something, do something in a video or something to say, look, this is the benefit of letting your trades run. There is a lot of benefit, but I don't think I'm going to be able to make it. I doubt it. We're getting razor thin here. Yeah, the coordinated global rate cut on Wednesday, that'll be interesting. We'll see. So this is why you need to make decisions, guys. I mean, really, seriously, you need to, if you haven't already done it, you need to do it like right now. There's 2 dialogues that you can have going right now. Complete risk off. It's going to get worse before it gets better. Okay? That's the first one, which means you're selling down here. Okay? Oh, what's happening on Wednesday? Like the Fed, the ECB, the BOE, the BOJ, maybe the Canadians. They always get invited last. Maybe they do a coordinated central bank intervention. Okay? So anyways, guys, you either have that in your cards or you're planning right now a bullish move. And you're saying that the virus might be spreading, but their governments are doing enough, and in particular, central banks. I got to make that a little thicker. and central banks are doing what they can. So put it this way, okay? Put it this way. If you could buy, I don't know, if you could buy an Apple computer for a, 20% discount, will you do it? And if so, that's what you're playing, is you're like, yep, this is bad. Everything's bad. I get it. And it's going to impact margins. It's going to impact sales and stuff on the short term. But I'm willing to take that risk if I can get a 20% discount. Or would you buy back into the S&P 500 at a 20% discount? No? Then what about 30? And at some point, you got to think about that. So if there is a coordinated response by central banks, and so let's say, I mean, there's only so much the ECB and the BOJ can do, right? But so whatever they're going to do, they'll do something, maybe quantitative easing at a higher level or something. I don't know what they can do. But on top of that, the Fed cuts by 50 basis points or something, right, to show how serious they are. Is that going to create an environment where things are bad on the short run, but you're thinking about this a year from now? At what point do you buy? So you make these decisions now, fellas, all right, ladies. You make this, and it would look like this if you're risk on. Okay? You need to choose the narrative. If you refuse to do this, you will fail. Okay? So a great example of that is this is the weekly and monthly buy zone. Okay? And this is the weekly and monthly sell zone. Okay? And you can see clearly that bulls are being bulls and bears are being bears. And if you're doing something different, like you're just making it up every day or every hour you're making it up, you're not going to survive. Okay? I don't want to get into dead cat bounce and stuff, but you just pick it. Are you a buyer or are you a seller? Okay? Because we know, and we've seen this in the past, and I guess maybe I can zoom out and see if it's happened here before. We know, like, here's what my swing traders are supposed to be thinking. I don't know if they are. I think they are. But I talk about the first hour of the first day of the new month. Okay? And if you're a bull, there's a pretty good chance you're going to see this. If you're a bull, there's a pretty good chance you're going to see this. And I'll come back and I'll say, well, where were you here? And you're like, well, it was such a risk off last week, and there was still news, and there was still this, and there was still that, and you just talked yourself out of a trade. Now, this is a high risk, but you need to manage that risk as you execute your strategy. So you have to clearly define, what is your strategy? Can't say, oh, news talked me out. Oh, well, this happened, and that happened, and that happened, and this happened, and that happened, and he said this, and she said that, and what the heck are you doing? Okay? So, again, what is the narrative you're trading? What is the story? Central bank rescue? Or it's going to get worse before it gets better? Okay? That's that. Okay? I hope that's helpful. I know it sounded preachy, but, you know, I can't, I don't know. I can't let you miss these things, right? Cool. RBA, yeah, cool. So I slaughtered this thing last week. Slaughtered Aussie. see. Okay, let's do, before we do yens, let's do commodities and stuff. Let's do a quick round the world before we get into it. Right? Kata says, I'd rather, or is it Kata? Kata says, I'd rather be bearish in these conditions. Great, sell high. Okay, sell high. So what do I mean by sell high? Here's Kiwi Swiss franc. You were supposed to sell it here about 4 hours ago at the London Open. Where's my day traders? Asia up. Ah! Straight out of the textbook. Just like this one, just like this one. This one was a little aggressive, just like this one. Okay? Where are my day traders? Who's completed the day trading course? Yeah, thumbs up, thumbs up, thumbs up. This is what we talk about, right? Lovely, with your smile so warm, right? Yeah, isn't that nice? Put a stop order and that worked out pretty well. Right on. Anthony shorted these things. Right on. Cool, man. Cool beans. Making the music. Abuse it. Yeah. So very, very cool. So if you risk off, that's that. It'll probably fall today. La, 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 la. And then you'll probably find yourself short here at a retest to 60 tomorrow. But not from the top, from the bottom. Okay, that's what I would guess. Now that's, of course, 12 hours from now, so we'll see. Actually, it's more than 12 hours from now. But see, I'm not thinking about today anymore. Do you understand? I'm not thinking about today tomorrow. Or today. I'm not thinking about today now. Today's already done. That's the whole thing. So if you're a new trader and you're walking in like, what are we doing today? Dude, you're going to lose your money. Maybe not today, but eventually. This has already been planned out and done. I'm already on tomorrow. Okay? That's why I'm saying, like, in 15 hours, there's probably going to be a lower low and I'll be selling a lower high. It looks like a retest of 60 will be good. So now I got tomorrow planned out. That's what I'm doing now in New York. I'm not planning New York. I did that yesterday. Okay? You should be moving your stop to break even today, now, and then all that kind of stuff. Okay? And like these you already know. This one's 400 pips profit, and this one is how much? 450 pips profit. Cool, right? See, it's sitting on. I'm right now at about 530 pips profit, but I'll throttle back. I have 475 on this one, and 300 on the other one, right? Cool. So let her fall. Today's done. Congratulations. Nice trades, Bears. Bears. Let's see. What was the trade plan for today on the British pound? Ooh, I don't know. Sell right about here. Anybody amazed yet? You knew this on Friday back here. You knew it when the market opened, and the hour after that, 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 and the sell. Actually, you know it's Asia Fade and London Open, right? So you know, like, that's London Open, right? You know London Open. It's right in here. Well, that's the world's worst arrow, right? So you're like, wait, go. Lovely, right? down, 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 up, sell, down, 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 up, sell, down, 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 down. What a wonderful Friday. Up, sell, down, 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 down. So if you were a day trader, not a swing trader, okay, you would have had one trade here. You would have sold at 139. We're at 137.50. You'd be up 150 pips for the day, except as a day trader, I teach you to start with a 33.99. So you would have already made your 99 and been done. $99 done. Right? I played a song the other day. I got 99 problems, but a pip ain't one. There's your 99. Richard, sit here every day for a year and then ask me the same question. Cool, right? I hope things are starting to click in for some of you guys. Yeah, this euro dollar, that's a stinker, huh? That's a stinker. Wow. Money just flowing back to Europe like crazy. No, we haven't done oil yet. Anthony, I just finished pounding yet. But yeah, this one, I guess it's Europeans bringing money home, huh? Yeah. So this one, I'm not trading. So I don't have much comments on it. I wouldn't be buying it if I were me. So this is just leaving me in the dust, and I'm trading everything else because everything else makes sense to me. And this kind of is counter to the other things that I'm doing, so I'm not on this. Nor am I even, I'm not even watching it during the day. So it's kind of interesting. And the reason for it is it doesn't fit my narrative. Yeah, grind, and we did talk about that, but why all at the same time? Like, why exactly at the same time? Okay. And it seems to me it's a lot like the yen weakening all of a sudden, 2 weeks ago, right on a Wednesday or something, like why all at once? But anyways, so last week, this was the buy zone. Okay. So bulls would have started buying there. Up, down, down, buy. Up, down, buy. Notice the price action. Beautiful role reversals, right? And then all of a sudden, up, down, buy. And now we have a new weekly and monthly buy zone. And it's just gone. Oscar Mike on the move. It's just gone, man. Just gone. And you can see the acceleration here from higher high, higher low, higher high, higher low. This is the stuff I expect. This is stuff you trade all day, every day. And then you're like, wow, what an amazing Thursday, right? And then Friday is, this is Friday afternoon, like, this is London close. So, right, here's a little fade. And it's just, it's like super accelerating. So I don't know if you're trading that, but now at the very least, you got to wait for the 55 to catch up before you get a new entry. Just remind yourself, you do not buy high, you buy low. You need the pullback. Now, if I were to use normal price action like I would here, then I would do things like I'd take these wicks and I would make them potential buy zones, right? So you could have it down to this price, which looks like it's 111 and then up. So you could buy a dip to 111 or buy a dip down here to 110.80 and the other one is down here 110.50, right? So you're going to need a dip. So it'd have to be something like this, probably the first one. So this might go, let's say, to 111.50. drop down to 111. Oh, so good. And then you buy it, right? The thing is, that would be normal price action, normal technical analysis, normal everything. I don't know if you're going to get it. The thing is, it's going to be a test of your patience and your discipline, and you should look at it that way. If you just throw down because you feel like you're missing out, you're throwing away your career. Yeah, and then Carlos said then a pop up to 112. That's what the technical analysis would suggest. You wouldn't buy a dip unless you expected an extension, right? That's right. Peter says this isn't normal. Well, it depends. If you thought it was going to do this, then you're going to say to yourself, well, I knew it was going to do this. This is normal. So I wasn't looking this way. That's why I'm being like upfront with you guys. Like, I'm not really watching it, not really trading it. Doesn't fit my narrative. But my Swissies are doing fine. My yens are doing fine. Like, I'm just not doing euro dollar. And some of the other dollar pairs are doing fine too. It's just not this one. So I'm not on it, not watching it, not interested. You know, right? If you already got 3 pieces of pizza stuffed in your mouth and you're chewing away, another slice, irregardless of it being a better flavor, is just not needed. I'm not sure if that was even an analogy. I think that was Confucius. I think. Not USD lira, no. I wouldn't be selling dollar. And that's why I'm not on this. Anyways, take a look at Bitcoin. Working its way back. So last week we were watching how we were below the mean price. Okay, we were below the mean price since the beginning of February. So now we're in March. So the mean price would be about right where we are now. So we're basically at the mean. Okay. So we'll see if there's a change in the velocity. Okay, looks like there probably is. One way to look at it is this, how you, I guess you can't quite see that. Let's make this white. You get this giant move down, and then you get hardly a lower low at all. Okay. So that, what is that? The 4th wave? Right? And so I think Elliott wave would suggest this, and then a 3-wave correction to the back, to the top of this channel. So anyways, whatever method you're using, we used to make pretty good lower lows, and this one was barely a lower low, and we've made almost 100% retracement. Okay, so that suggests probably at some point. Okay, so be careful here. Maybe if you want to think of it this way, be cognizant of the potential for an inverse head and shoulders. What? Hoorah! Well, Eurozar should be straight up like a rocket ship. That makes sense, Peter, because it's over a platform. Right, so the reason for euros are, you can clearly see money is flowing to Europe. Okay, there's no doubt. So you know euro strong. And under risk-off conditions, one would expect, I don't even have to look at a chart, but under these market conditions, you would expect an exotic currency to be destroyed. Like the rand should be destroyed. The Turkish lira has just been ripped apart. Yeah, that's what you would expect. Okay, And how about Euro Noki? Well, we talked about the Norwegian krona on Friday. I outlined the entire history of North Sea oil. Did anybody enjoy that? The entire history of North Sea oil? In particular, into relationship to Norway? So anyways, under these circumstances, one would consider that Euro Noki would be straight up like a rocket ship. You don't even have to look at the chart. I wouldn't understand why you'd think something different, right? So I'm not saying you are, but like, what do I think about it? Like, right? You would have basic assumptions. Now, if I looked at it, it was different, and maybe that's what you're saying, then I'd say, oh, well, that's interesting. But it probably isn't interesting. It probably is straight up. Oops. So anyways, let's take a look at oil. Okay. Down, 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 down. We made it to 44.04. In fact, we made it to 43.55. Okay. Two areas to sell if you're a bear. Oops. The first one is, I don't want that either. Hang on. Let's do this again. Wanted pink. All right. You have this area here for a weekly. You have this area here for a monthly. And you have this area here as a dynamic resistance. So bears would obviously clearly sell this zone. Okay? And here's the, look at this, looks like on the second last, no, that is the actual last hour. No, second last hour. Second last 4 hour. All right, so London closed on Friday at exactly the monthly target. Isn't that interesting? Looks like it was $43.83 or something. Look at that. Right at the London close on Friday, the last day of the month. The last hour of trading. Hit it, and then look at it pop. Pretty interesting. Blake, hey, the market is open. Oh, then stop using them. Sure, Peter. Peter, there's a lot of history in Europe. Ba-ba-ba-ba. By the way, are they still pitching themselves as like a free trading service? I don't know much about them, but someone told me that like everyone's using Robinhood now because it's free. I'm like, what? It's not free. Nothing's free. They're like, yeah, let's throw away millions of dollars for altruism. No, dude. So anyway, so your narrative here is either risk on or risk off. So on, you're going to look for this. And off, you're going to look for this. Right, of course, Peter. You pay through a spread. Of course. But I don't know if they say that. I think they tell people it's free or commission free. They say, oh, it's commission free. You don't pay a commission. Well, that would be misleading. You pay money. And of course, I think there's a huge, like someone was telling me that once a day on Robinhood, you know, that they send out like, hey, you should sell XYZ Corporation. It looks like a big sell. And of course, 90% of the people that subscribe to their service, which thinks it's free, they look at this and like, oh, that's so good. Boom. And everybody just does that. So the potential for them to take money from someone to say everyone should sell this stock, or to simply front run it is, oh, it's so extremely high. And that would be such a, oh, I don't know. It'd be hard to trust any of that. But anyways, let's move on. Well, Blake, that's a spread. So you can't say it's free, is what I'm saying. You need to tell someone that you pay through a spread, not a commission. So like, for example, in Forex, right? They'll say commission free, but you pay a spread of, let's say, 2 pips. And then some people say, I don't like spreads. I'd rather pay the commission. So we call that an ECN. What I'm saying is my spidey senses are tingling, and I think a large percentage of people think commission free on a site like Robinhood translates to free, which would not be true. They're just, right. So anyways, whatever. I need to move on. Well, you got to be careful, Daniel. It's risk off right now, so I don't know if you want to be throwing down high risk trades when there's risk off. So you got to match. You got to match your trading to the market conditions. Okay, so just be careful. If we get a central bank coordination this week and market conditions changed on, quote unquote, being saved, then that might be different. Then that would be game on. But we're not quite there. But you can look at it and start identifying your prices. Plus, we do know there's a flow most likely, right, coming up. So, I mean, we can watch it this week, sure. But I want to give you an idea of the things that you should be watching for a barometer. Okay, so I don't know if you guys are paying attention or not. If you see this, this is risk on. And if you're a risk on trader, you should probably have 14 different trades that are all doing the same thing. Risk on, risk on, risk on, risk on. Okay? Where a risk on trade will be challenged is here, which I've already clearly articulated. Okay? And the next one's going to be here. Okay? Okay? You understand? So which one do you believe most? This one? Then set it up. Okay? You got a dynamic resistance here, and then you got the entry there. The next one's a little higher, which I already marked for you last week. So you're either going to sell it at 46.5, or you're going to sell it at 50, or not quite 50 and not quite 47, right? Or not quite 48. So let's say you're either selling at 47, just below 47, or just below 50. So you need to write that down, plan it out, meditate on it. You should be able to see the price action in your mind. Okay? Which is a lot different than just making it up as you go. Okay? So what you going to do? Well, one thing you can start by doing is saying, well, let's take a look. Let's move this to 46. Will you sell 46? Okay. Next one is, will you sell 47? Will you sell 48? Will you sell 49? Am I oversimplifying? No. Where are you going to sell? What's your price? Now, the interesting thing is if you're a bull, these same prices will work for you. You'll probably see it do stuff like this. Okay? But as a bull, you should also understand, like, there will be a lot of bears here in this zone. You should be prepared and manage your risk appropriately. And a whole bunch more up in this area. Okay? Okay? So you can see, well, you've already potentially missed the first move. So what's the next move using price action? Down, down, down. Come on. Down. Come on now. There we go. Blue. Down, 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 down. Up, up. Down, 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 down. Up, up. Down, 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 down. You got it? So Stevie says, hey, obviously I like 49. Cool. So what if it doesn't make it to 49? You're going to walk away? That's why you got to have plans, guys. Your tactics have to follow your strategies. If you get a lower low off of a price, what are you going to do? Sell the lower high. Get in the game. Okay? Okay? All right. Coolio and Goldie. Let's do some Goldie. Goldie, 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 Goldie. All right. Gold open up right on the buy zone. Even or Friday front run it, whatever. So you got two choices of what you can do. It's not a tough decision, as you can see. This is the monthly and this is the weekly sell. This is a huge sell zone right here. Sell zone. As they say in Italy, sell zone. Okay. So you took it, right? If you're a bear, you took it, right? Down, 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 down. Up, up, sell. You're down. You're done for the whole month. Done. All right, so somebody said, oh, Mr. High Volt, I thought gold, blah, 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 blah. Look, if you're a bull, Mr. High Volt, buy the dip. Or buy the double bottom. You're like, how come it's not going up? Why do you say it's not going up? Oh, because it fell yesterday? Come on, man. You're like, I thought it was supposed to be going up. You don't think it's going up? Oh, it didn't go up yesterday. Come on, Mr. High Volt. Okay. More of a sheep. I'm just saying, man, like, it is going up. So what's your problem? Oh, well, it dropped for a whole day or a whole 2 days. Yeah, but it's been going up for 6 months, right? So plan the next trade. let's analyze this a little more and say, no, wrong one. I want to open this one up. 2. Okay. So we knew, so let's look at the facts, Mr. Highvolt. Oh, let me turn my drawing tool off. All right, we knew a couple of facts last week. Okay? The low of February was this price here. That predicts we will get up here and bulls will exit. Is that factual, Mr. Highvolt? Based on this low, we have a projected high up here in which all bulls should take profit. Cool. Let's take another look. Last week, the market opened, and I want to do this one in pink. Last week, on Sunday afternoon, New York time, the market opened right here. This is a buy, and the target was here, in which all bulls that bought low would exit. Is that correct? Yes. Then you can see it was actually a weekly out of position trade, which we hit our target. It was Monday afternoon. I think it was Monday afternoon, maybe Tuesday morning. What is supposed to happen under those circumstances? What's out? It's straight out of the swing trading course. This is swing trading 101. OOP, ride the 4H21, hit your target Monday or Tuesday. What's the outcome? Massive counter trend. Cool. Which it did. So now you're like, how come it's not bullish anymore? Well, we have at least 3 reasons why. Are any of those reasons fundamental? The monthly swing, the weekly swing, and the counter trend. Are any of those fundamental? No. So if you were going to start all over again, you would do it this way. This was your monthly buy price. This was your weekly buy price. And your first target is here. Okay? So is this uptrend over? Maybe. I don't know any more than you. But if you wanted to be a bull, do you still have reasonable possibility of it remaining bullish? Okay? But maybe things have changed. Maybe that's it. Well, then have your line in the sand, what I call my Alamo, your fallback position. And if you lose that position, you retreat. Where's that line? Oh, probably this zone. Okay? So if this happens to you this month, you should probably stop buying. Okay? But you should feel comfortable that you're near that price now. There's hardly any money you can lose. Okay? Because you're like, oh, this is it. This is the best price. I got the best deal. This dropped like 150 bucks an ounce. Awesome. I'm going to buy it. I am buying it. I'm so happy. I got a deal. Fantastic. This is great. Super happy. Okay. But to have this knock you out of your long-term bullishness, nah. You're day trading, bro. And be careful. Oops. And did I just kill my gold? I just killed my... No, I got to do it this way. Ciao. All right, cool. So, wait it out, huh? Wait it out. So we'll see if the central banks can save us. You're not alone. Let's bust out our Fed Watch tool. La la. Oh, no, don't go full screen. No, it's more of a put, Alejandro. Check this out. 1 month ago, 1 week ago, okay, 1 week ago, 20%, right, let me see if I'm reading this right. Okay. Is this right? This doesn't seem right. Am I reading this right? Maybe I'm having a brain fart. Maybe I should refresh my page. Yeah, Javier, they make money selling you gold. All right, anyways. A month ago, we didn't think there would be a very, very large cut in March. And then, right? Let's say, no, let's say this differently. Okay. A month ago, we thought interest rates would be the same in March. Okay? 26% a month ago said the Fed was going to cut. Now we're pricing in a big cut. 100% chance. Crazy. And, right? It's just in the last couple of days. That's what you would think, Stephen, but you see the euro destroying the dollar, which is very unusual in a situation like this. But I think it's maybe Europeans bringing money home out of the US. Another thing that's going on here that you don't see on this chart is that there's a huge rally in the 2-year. Huge, ridiculous. Remember, we're talking last week about a tsunami of money. It's all flowing. But what's happening is money is coming out of the stock market and into the 2-year. And I think foreigners are maybe bringing money home because they're thinking, well, if the Fed's going to cut interest rates to zero and interest rates back home are already zero, there's not a lot of reason, right? So I don't know. It's kind of perplexing. So anyways, let's skip April. Let's go to June. Okay. And 40% of the market believes it will be at 0.5% by June. The other 50% believes it will be at 1%. I seem very legit. What is that? Thank you, I guess. I'm not sure what you mean by that. That's part of a day trade. All right. So right now, March looks like a giant cut, get us down to 1%. And by June, right, we'll be under 1%. And then the next big one is SEP. And right now there's a 21% chance we'll be at 25 basis points and a 3.5% chance that we'll be at 0. Look at November, goes up to 5%. So the market is actually saying that they'll park it at 0.25%, probably never hit 0. But if you look at by the end of the year, right, more than 1/3 of the market says we'll be at 0.5%. Okay? So Mehdi says, will this weaken the dollar? This should strengthen the dollar. So right now, people are buying bonds now because they know the Fed's going to be buying bonds the rest of the year. That's what it means, right? That's what it means. If the Fed is lowering interest rates, and you can see this is being priced in. This is not sentiment. This is being priced in the money market. Okay? 100% of the market believes we'll have lower interest rates at the end of the year than right now. 100% of the market. Oh, right on, Anthony. Which I guess, see, what it, I suppose I spend too much time analyzing stuff at school, but like, so if you're like, hey man, you're a solid dude, there's an implied like, I didn't think you were a solid dude, or most people I've met were not solid dudes, so it's surprising, right? Not that it's wrong, but it's very interesting, right? When it's just interesting. It just shows sort of the lens and what we look through. And it's important because, well, we probably have experienced that. We probably have seen a lot of things that put our shields up. And so we look at things as negative first, and then it has to prove itself positive, right? No, I know what it means. It's just, it's interesting. Unfortunately, we live in that world where, right, that's the outcome. I'm not saying it's wrong. I'm saying it's right, but it's too bad, I suppose, right? So anyways, guys, if 100% of the smart money believes the Fed will be buying bonds, right? What do you want to do before the Fed acts? You buy bonds because the Fed's going to buy bonds from you, but at a higher price. It's called free money. There's also the opposite side of this same coin. Okay? Let's say you're thinking about taking money out of the stock market because the stock market's falling. Okay? And you decide you want to buy a bond somewhere between now and the end of the year. If you buy right now, it'll pay you 1%. You're like, that's not a lot, but I'll say, well, that's what it used to be like if you parked your money in the bank. But right now, your bank doesn't pay you anything. So what if you could just, for a year or two, park your money in a bond? Should you wait? Well, if you wait, it'll go from 1% to 0.75, and then from 0.75 to 0.5. Let's say for sure, like extremely high probability that would happen based on what we're analyzing, and maybe even less. So if you wait, let's say 2 or 3 months to make this decision, you will lose 50% of your income. If you wait another 6 to 8 weeks. Well, shoot. Because you believe there's a 100% chance that's going to happen. So what do you want to do? Do you want to buy now? Or do you want to think about it? Talk to your wife. What would you do? You're going to dump the stock market. You maybe already have done it. So now your money is sitting in a bank earning zero. You're like, well, I really should buy a bond. Do you want to buy now or do you want to buy later? Hello? Is my microphone on? It's not a hard decision. It's straight up mathematics. Buy USD. Well, that doesn't do anything, John. We're talking about bonds. A dollar doesn't pay you anything. You have to buy now, right? Buy before the cut. People are scrambling to buy bonds before the Fed cuts. And if foreigners are doing it, then they buy the dollar, John, but they don't buy the dollar. They buy the dollar to convert it into a bond, a treasury from the government. You see what I mean? If you're 100% sure they're going to cut interest rates, and you're 100% sure you want to be out of the stock market, then get on it, boy. Get that 1% while you can, while the getting's good, because in a couple of weeks, you're going to be crying tears of poverty because you just threw away 25% of your income because you couldn't make a decision. But the decision's easy. Okay? You see that? And that's why there's a massive run on treasuries the last, week and a half? The 10 years dropped, the 5 years dropped, the 2 is ridiculous now. Just huge amounts of money flowing into the 2 because they believe it's transitory. 2 years gets them through the virus, right? We'll have a vaccine in 2 years. It'll get us through the election and all that kind of stuff. Okay? So that's what's happening, guys. That's what's happening. When you read this, you should be making money. there's a 100% chance the Fed's going to start buying bonds like crazy. Not today. They haven't announced it today. Now we have, right? I have my ears to the train tracks. I have the ears to the ground following Tatanka. And it's telling me that there might be a surprise cut this week. You know that, right? You got your ear to the ground too? And you're like, oh my gosh, there's some rumbling. There might be a surprise cut as soon as Wednesday. Then you got to get on it now. You can't wait till Thursday and say, oh my God, the Fed's slashing interest rates. Uh-huh. You like that, Joey? Tatanka? Stands with pips. Huh? Is that your Cree name? Stands with pips. Right? Or as Ryan would say, handful of rand. That's his Cree Indian name. Behavioral finance. Yeah, it's just Harvard mumbo jumbo, right? So anyways, interesting, right? Lots of requests for peso. Sure. All right. Peso! Let's see. This is the exact price you want to sell. Am I correct? How about 20? Do you think that's a psych level? Cool. So if you're going to do it, plan A is the best plan. But there might be one of these things. I call them Arctic turtles, right? Let's say it comes up, comes down, extends up to 20, comes down, and then does the monthly plan just like you thought. Live.fxbootcamp.com. Yeah, guys, if you need performance coaching that will change your life and change your perception of everything to do with Forex, if you like, not just watching some videos and watching someone else do it, if you want to truly master trading, you need to go to live.fxbootcamp.com. A true boot camp to force you to do the work. Do the work, do the work, do the work, develop the skills, do the work, do it again, do it again. It'll be truly an awakening. You're like, I'm pretty good at technical analysis. I'm pretty good with fundamental analysis, but I'm not successful. Why? Because no one's ever taught you how to trade. That's the next level. So you might have the intellect part, but you don't have the physical habits. Physical, I mean actually physically doing it. It's like you watch a lot of golf on TV, so you should be able to golf, right? Oh my God, I've been watching Wayne trade currencies for 18 years on YouTube, but I'm not as successful as I would like to be. Why not? Right? Well, there's a difference. You can't watch golf on TV for 18 years and expect to be a better golfer. Same thing. So if you want to get to the next level and you want to have someone work with you as a performance coach, then go there now. But don't have any delusions of grandeur where you think like, oh, I'll sign up and that'll be enough. That's what will make me a success. Get ready to get your ass kicked. In a loving, positive environment. All right. All right. So anyways, the timing's right. The price is right. So the question is, are you going to do it? We know we want to do this at the beginning of the month. We know we need resistance. We have two massive levels of resistance. So it comes down to your entry and your risk management. Okay? So you have everything you need here to cook this up. That's right, Pasha. Euro dollar is skyrocketing like crazy. There's no doubt about it. So right now, Aussie is weak, pound is weak, Kiwi is weak, CAD is weak, Swissy is strong, Yen is strong. So all of these I got nailed down. This one, I'm wrong on in the moment. No, the dollar is weak. Okay, US dollar is weak. Now, we're in a time and place now where there's jostling for position. People are repositioning themselves. This is a real exogenous shock. It really is going to impact the stock market. There's probably going to be a recession from this. There's probably going to be central bank intervention. We also have an election. There's a lot going on here that people are awakening to. A couple of weeks ago, we weren't sure the significance of all of this. Now people are coming to understand that there are likely to be larger consequences of these conditions, and people need to adjust their portfolio and their strategy. So typically, under a global crisis like this, dollar would be strong, just like Swissy, just like yen. And I told you to expect Swissy to be strong. I told you yen to be strong. And how many times have I said over the last 6 months, I'm not so sure about dollar? I said, typically, I would be buying dollar too, but I'm not so sure under these conditions. Okay? And, okay, we're kind of seeing this. This one is sort of a decoupling. But to go to Pasha, go back in history. I don't even know if I can show you this, but let's talk about euro dollar. I don't know how long you've been trading. So I'm going through my 20 years of experience. Right? Dollar is weakening. Okay? Let's change this. So please stop talking and listen for a little bit, okay? Otherwise, it's not a conversation. All right, so I can tell you my 20 years of experience has shown me things. Now, maybe it's wrong this time. I'm okay with that. Okay, but hear me out. I'm trying to just get to a basic trade. Naked chart, scan. I wanted something even more basic than that. Anyways, we'll leave it there. Let's go to the weekly chart here. Okay. All right, 2008, 2009. Okay. This is the Fed cutting interest rates. Okay. While that happened, the dollar was by far the strongest currency on the planet. Okay? Check this out. Let's look at it, the whole Monty here. Year 2000 recession ends. Okay? By the way, notice this. This is Greenspan cutting rates. Interest rates down. Dollar strong. Then we get a great economy. Fed raises interest rates. 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 And that whole period, the dollar was weak. So this is, in this period, dollar strong when it fell. During this period, right, dollar weak, well, rates went up. Then from 2008, Fed cuts, Fed cuts, Fed cuts, Fed cuts, Fed cuts, Fed cuts. And the dollar is strong. Then more recently, Fed raises, Fed raises, Fed raises. Dollar is weak. And now Fed is cutting. Okay? So, yes, we're not quite seeing this. We're not quite seeing this now. Oops, did I want to show this? Anyways, we're not seeing this quite now. There's a bit of a decoupling, but I've been very clear on that. I'm not entirely sure why. I don't know entirely sure how long it'll last. But you can see some of these trends last years. So to have a couple of weeks where this is going up versus down, well, it's a beginning of a new market scenario, right? A different narrative, as I've been saying today. And so this could just simply be money on the short run coming back to Europe, okay? A lot of this can be traders in the United States having been heavily short euro are suddenly just getting out of those trades. It's, okay? Does anybody know how to analyze why this is going up? No, Max, it should get strong in the short term. Commitment of traders. So I've showed you the Fed Watch tool, but why don't we do the COT data? So let's go to Forex.Today. Okay, so looking at this, I can tell you that there are actually less bulls of the euro. There's week over week, there is a decline in the number of buyers, a decline in the number of euro buyers, a decline in the number of euro buyers. There are less euro bulls this week than last week. But there are way less people shorting. Way less people shorting. Redonkulous decline in shorters. People, guys, listen. There are less bulls and there are less bears. People are exiting, Pasha. Exiting. This is people simply getting out. They're not buying euro. They're not shorting euro. They're closing their euro short trades. And the few bulls that there are now less of. This is an exit out of positions, guys. This is a rebalancing. Taking profit, Yeah, they were probably making money as a short. Okay? But it's traders getting the heck out, Pasha. It explains why this is happening. But what do you think they're going to do when they want to re-enter, Pasha? If you had to guess. We knew there were significantly more bears than bulls. Now there's significantly less of those bears. What do you think is going to happen when they determine they want to get back in? Well, Pasha, at the end of the day, we don't know why they're reasoning. Okay? Yeah, Peter, you can use Fibonacci on monthlies. Sure. So be open-minded to that. Okay? But in my humble opinion, when the Fed cuts interest rates, the dollar will get stronger. Because I think in a large way they're trying to front run the Fed buying bonds, because that's how you lower interest rates. So they want to buy bonds today and then sell them to the Fed at a higher price. So for example, I've been telling you the 2-year market, right? The 2-year treasury, the 2-year note, has skyrocketed the last 2 weeks. Like straight up like this. Straight up rocket ship, straight up 2-year. When I told you 2 or 3 weeks ago, you could have bought it here. Then the price went up. 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 And then what if the Fed jumped in on Wednesday and wanted to buy some notes, 2-year notes? Well, you can sell it you could sell yours, or you could wait for them to drive it up further and sell later on. But you're pretty sure that the Fed's going to come in and buy tens of billions of dollars of bonds. And you bought 3 weeks ago at whatever price, right? Let's say you bought at 105 and they come in and buy it from you at 108.50. Okay? That's it. Okay? If foreign buyers get involved, they're going to need to buy the dollar first. Okay? No, they're exactly the same, Gregory. Unless I might have switched them up because somebody said they couldn't run them on MT5. So maybe I switched them to someone else's. I may not have ever switched them because there wasn't. So no, wait, no, you know what? I paid someone to reprogram them. So they're exactly the same tool. Maybe you're not using the template. So this is the wrong one. So there we go. So there's a few things going on. You have to have the indicator first. So that is this one, symbol X. The second thing is you have to have the template installed. And the template is whatever template, load template. I wish I'd told you which template it is. It's an index. It's this template though. Okay. So this is this template. And then you have to have the profile. And this is the whole profile. Okay? Profiles are over here. Okay? Okay. So if you don't have the profile installed properly, this is not going to look this way. If you don't have the template installed properly, these individually won't look this way. Okay? And then if you don't have the same indicator, and this is all based on symbol X. If you have a different indicator, then it will look different. So double check. Right? And then also double check if you're running MT5 and trying to run the MT4 version of symbol X, that also explains it. You have an MT4 piece of software plugged into your MT5 piece of software, and they are not downward compatible. They should be, like if you were programming it, but it ain't. Max, let's do that. Max is missing it. Let's go back. All right, Max, here we go. First of all, Max, you should have two templates. One is called Day Trading Bearish. The other one is Day Trading Bullish. That was included in the day trading course. As well as the indicator, which is my indicator called, well, this is Wyatt. So let's switch this out. Let's go. So it's stuck in bearish and you want it to be bullish. Okay. So I go bullish. Or was it the other way around? How come I can't be bearish? You want to be a bear. All right. So let's do this. Template bearish. Okay. That's how you do that. You're supposed to manage it through your templates. So if you don't have these templates, you didn't install them or download them or whatnot. But you're supposed to have these two. I gave them to you, as well as the indicator. And the indicator is called biased pivots. Okay? Now, how do you do it manually? Might be your next question. If you didn't want to do it through the template, for some reason you don't want to change this chart. You just want to change the indicator. You go to indicator list. You go to biased pivots. And you go change this from bullish mode to bearish mode. Or bearish mode to bullish mode. So I'm bear now. Now it's bullish. Now I want to put it back to bearish. So I change it to bearish. I'm very indecisive, but so I say, you know what? I want it back to bullish. So I go to open it up, change it bullish. Now that's a pain in the butt, I think. So the way I do it instead is just go through templates, template, okay, and bullish. And then I change my mind, so I go template, bearish. And it's less clicks to do it through templates. Right, if you are missing symbol X, then it will not work because that's the thing making the indicator. So you will have to download that again and install it. When interest rates are lowered, banks will pay you less. Correct. I don't know why the profits would have to anything. And the foreign investors go out of the U.S. Is that right? Well, no. Mehdi, the United States is a reserve currency, is the only reserve currency. So you're confusing sort of monetary policy with every other country in the world, but the United States is not every other country in the world. Okay? So when interest rates are lowered, banks will pay you less profits. Banks don't pay you profits unless you're a bank owner. When interest rates are lowered, the banks will pay you less interest. Yes. But profits? No. That has nothing to do with profits. And then foreign investors will go outside the United States. No. Most foreign investors in the United States are not buying U.S. treasuries because they want the interest rate. They're buying it because they want a legal system. They want a mature bond market. Okay? They want a domestic economy. They want a stable government. And they want a tax base. Okay? So, if you're in some country that doesn't have any of these, then you'll pull your money out of your country and stuff it into America. Okay? So for example, let's say China goes into recession. China goes into recession. What happens to Australia and New Zealand? Katu, usually it has to do with size and liquidity, and market pricing. Yeah. If China goes into recession, what happens to the U.S. economy? Yeah, not boom. I don't know if boom means good or bad. I don't know if boom or bust. But the vast majority of the U.S. market, or the U.S. economy, is U.S. 70%, in fact, is the domestic economy. So do you know what happened to the during the trade war with China? And there were tariffs put on everything, and people were freaking out. You know what happened here? Nothing. Nothing happened here. You ask the average guy in the street, they heard about it, it's on the news, and they're like, so how much are you going to adjust your life? None. Not at all. Not even in the slightest. They're like, oh, yeah? Yeah, trade war? Yeah, that's bad. How's this affecting your life? Nothing. Now, of course, I do have friends that are in the, I'd say, supply chain management, drug dealers. They're in the supply chain management business, and it hurt them for sure. And they were filled with dread and worry. But the average guy on the street, they're like, didn't matter to anybody at all. So, whatever. Okay? So here's your job, guys. Pick your battles. Euro dollar skyrocketed. Should you be a bull? That's for you to determine. Should you be a bear? That's for you to determine. But luckily, once you flip a coin and make a choice, or do some analysis and make a choice, whatever, but please make a choice. Let me say that again. Please choose whether you're going to be a buyer or a seller of euro dollar. Make a choice. Stay firm. Does that mean just if you decide to be a bear, do you sell as it goes up? No, I never once said that. That's stupid. But you can wait. If you're going to be a bear, and for whatever reason, I don't really care, but you decide to be a bear, now you use technical analysis. Remember, you actually have to do work. Technical analysis to determine the right price. Well, let's do it this way. The right price and the right time to sell. That's it. That's all technical analysis tells you. Doesn't tell you what to do. It just tells you the time and price. So, and if you're a bull, now you know what to do. You need to buy dips. What's the big deal? If you're a bull, buy dips. How do I know when to buy? Use technical analysis. But don't buy it just because it's up now. Okay? Make a decision. Use technical analysis to help you with the price and the time. So let's take a look at this from a bullish point of view. Okay? Let's see how complicated. You should buy it here. 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 You never got your chance, and it's Oscar Mike again. Now, let me remind you, you'll always know tomorrow. This is tomorrow's buy zone, guys. Tomorrow. So if it does this tomorrow and you don't buy it, I don't believe you're doing your work. I don't believe it. You're a bull, but you missed that one. 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 Then you're not a very good bull. And you need to work on that. Okay? Or if you're a bear, does this look like a good sell? No. Does this look like a good sell? No. Does this look like a good sell? Hey, it just went up 1,000 pips. Does it look like a good sell? No. Look good yet? No. How about now? Do you want to sell it now? No. But what if you got something like this? All right, that'll be interesting. Okay? But not now. It's super easy. Ridiculously obvious if you have a trade plan based, confirmed and denied through technical analysis, right? So is this a bearish market? No. Then don't do anything. For how long? For the whole day, bro. The whole day, do nothing. It's better. Trust me. It's better than losing money. Okay? You're using technical analysis to confirm and deny market conditions. You're looking for market conditions that are favorable for you making money. If you're a bear, is this favorable for you making money? Well, you might say, well, Wayne, there's this level here, and Wayne, there's that level there, and there's this psych level thing, and it's gone blah, 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 blah. Are market conditions favorable for you making money? No. Oh, but no, that's gambling. Show me the market conditions. Show me the reversal. And then fire for effect. Sell high. Right? Sell a lower high. Sell the next lower high. Sell the next lower high. But not here, 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 not here. Still not now. Maybe tomorrow, but probably not. But one day you'll get your time to shine. And you'll kill it and you'll make money. Okay? Okay. Well, I wouldn't worry about someone's talking about this swap on euro dollar and stuff. Dude, the swap's so small. Like, for example, I think I made 1,000 pips on Friday on selling Aussie, but it cost me like 16 pips in swap. You're like, yeah, but that's... I mean, dude, just make the trade, man. It's not a big deal. Now, it's a big deal if you're trading ZAR. It's a big deal if you're trading Lira. And especially if you're holding for a while. But to pay 1.5 pips a day, but you're making 50 to 100 pips on the move, dude, it's a tiny, tiny cost of doing business. Okay? But what I was showing you on the Turkish Lira, right, I'm on month 10. My goal was to hold it for 1 year. If I can hold it for 1 year, I earn 1,100% in interest. Okay? I certainly don't want to pay 1,100% negative interest. That would be horrible. So, but, you know, when holding a euro dollar short or a euro dollar long, and let's say every single day you'll lose, you know, it's not even 1 pip, but let's say you lost 1 pip. Okay? You lose 1 pip a day. But let's say on average you're making 62 pips per day. Now you're like, yeah, but after costs, I'm only making 61 pips a day. Well, that's probably something you can live with, right? By the way, I don't even think it's 1 pip a day, because that would be $365. Well, if you're doing standard. One standard lot, 365 pips a year. But, yeah, whatever. Yeah. There's a point where it just costs doing business. All right. All right. Well, I think I'm done. Peace on earth. May the pips be with you. May your profits be above average. I will see you tomorrow. Thank you for subscribing. Please click the like, and please leave a comment on today's video. Thank you for being in my life. Thank you for being a part of the Forex.Today community. And please pay it back. Visit tradersway.com and open up a demo account simply as a way to thank them for being the sponsor of our daily webinars, and then give them an opportunity to earn your loyalty and respect. Maybe, just maybe, when you're ready to trade real money, you'll choose Traders.